Hi, welcome to another video. This is Patrick at US Options Income. Now let's have a look at the strategy of writing a put option or selling a put option in order to get some income and possibly to buy a share at a wholesale price. Now, I'm just going to show you this particular stock. Let's say, for instance, we've had a look at this stock. It's moving up quite nicely, but what's happened is that there's been a bit of a drop and say some consolidation here, and we think, look, it's been trending upwards. It's broken through that trend. However, I'm seeing some consolidation at the 200-day moving average, and I think over the next couple of days it's going to consolidate a bit further. So what I could do is watch this over the next couple of days, and once I'm comfortable that the stock is stabilizing, then I can look at writing a put option to create income. Now that put option means that I have the obligation to purchase it at the price that I promise up until expiry. Now what I've decided is, hey, this stock, it's currently trading around at 47. If I look here, where are we? We see that in the past, what's happened is that it's found resistance here. So that's a significant point there. It spent a little bit of time at around about that $46 mark. So what I'm going to do is I'm going to sell a put option in order to acquire that at $46, or just receive the income for the put option. You can see here that this is also a bit significant, that the 200-day is around about that 46 mark, which should provide a reasonable degree of support in there. So let's say I've decided that's the $46 put option that I'm going to sell for income. Okay, so I'm actually in a virtual account now, and you can get this virtual account through Options Express. You can just join. You'll get an account like this. This account is not equipped with margin, as you'll see. So there's no margin lending associated with this account, nor are you able to sell puts with margin. So it's a cash covered put. That means that we need to have the right amount of cash to be able to buy the stock. Got $25,000 there. Now remember, it's about a $46 stock. So what I'm going to do is get my calculator out, and $13,000 is about half my account, divided by 46 means that I can't quite get 300, so I'm going to just go for 200. Now why am I doing 200 shares? Well, that's 2 contracts. There's 100 shares per contract, so I'm going to only be able to write 2 contracts if I wanted to be able to diversify in this account across at least 2 different trades. So which is what I like to do. So in order to sell the put option, what I'm going to do is go to quote and go to option chain, and I'm going to find the stock that I was looking at. Now it doesn't matter what the stock is. This is not for you to actually follow along the stock. This is just for you to see the concept of it, basically. Now I'm currently in November. It's only 4 days to expiration. I'm not going to write the November, so I'm going to go to December. And where are we? We're at $46. So I'm going to receive 89 cents for selling this option. So I am going to, if I look at what I can do here, is I can either choose a limit, which is the lower limit there, to try to get filled at that particular price, or else I can change that to market. If I change it to the market, whatever it opens at, that's what I'm going to get I'm going to get filled at. So what I might do, in case there's a big move in the market, I don't necessarily want to get caught out. So I'm going to put it at limit, and the limit is going to be 89 cents. I mean, I could make it 88 cents if I definitely want to get filled. But any which way, I'm going to put that on at that 89 cent mark, and click. Oh, and I'm going to do 2 contracts. And for that I'm going to receive $163. So I'm placing my virtual order. There we go. And view order status. I'm going to go in there and view my order status, and I can see that that's my order status there, that I've got an order in the market and 89 cents, so about $163 is going to come my way when that gets filled. Now, what sort of return is that? Let's have a look. So if we figure out, go back to the calculator here, and we go 46, so I'm putting up potentially 46 times 200 shares. That's 9,200. Just remember that. And I'm receiving $163 divided by 9,200 times 100. So I'm receiving 1.7% return. Okay, now that's assuming that the stock drops to the $46 and I get exercised. Well, I'm buying at 46, but I'm actually buying it at a discount. I'm actually buying it at about a 2 or 3% discount to the current market price. So that's not too bad. I get a discount, plus I also get paid to do it. If we keep on doing this, this can be a regular income, and if a stock keeps on rising, we never actually have to buy the stock, we just receive the income from it. Now that annualized times 12 comes in at about 20% per annum, and it's a relatively conservative and safe way to generate income with cash covered puts. 20% return, even the most outstanding year in the stock market rarely returns 20%, whereas utilizing this strategy, we could potentially make 20% relatively safely without the stock market really having to outperform. Even if we're exercised on this one, we can take possession of the stock and then we can write a covered call to generate more income from it. And I'll show you how to do that in another video.